Welcome back, Outfunders. Man, I hope everybody's doing well out there. Had a great weekend. I hope you did have a great weekend. It is a very mellow Monday as we aren't really doing a whole lot. And that's about all we need to know. We're not doing a whole bunch. I'm going to go look around at a few things real quick. Let's see if we've gotten. I don't know if it's not updating because I'm not a member. Regardless, let's see if we can find another source. Growth by month. Trade economics. Let's see. Jan. Well, that's going to be quarter. That's got to be quarterly. Quarter over quarter, second estimate. Hold on. What is this? Calendar 330. 427. I'm just trying to find some information, but I'm trying to now understand what this is saying. Actual came out 1.1. Yeah, previous was consensus. Forecast was around 2.3. So for Q4, so we get another revision to Q1 here in 3 weeks, is my understanding. So we're going to get that on May 25th. And it's going to be really interesting actually on May 25th if they revise down. If they do revise down. Anyways, that's not exactly what I'm looking for, but Huel, GDP monthly. Where? St. Louis Fed? Oh my gosh. I hate the government stuff. It's just so crappy. Just the layout of it. Let me know if there's anything you guys want to look at. Oh, let's just run through the markets real quick before I go down a rabbit hole. SPY not doing a whole lot. It's basically flat. It hasn't done a whole lot. From the close on Friday, we have ranged to a high, basically the open high we had. We were up 0.1%. Big whopper. And we ranged down to roughly a 0.25% down on the day. So yeah, we haven't done a whole lot. We just haven't seen a whole lot of movement. What's going on? Sub, how you doing? I haven't seen you around in a while. Hopefully you're doing well. As far as the Qs actually opened down and they've traded higher throughout the day. So that's tech. All good. Hope you're doing well. Yeah, no man, I'm doing well. Doing well. I have no complaints. And thank you for asking. AAPL, obviously Friday's trading day was after its earnings. Trading flat. It had a little gap down. Not really getting the follow through here for the past couple hours like the Qs are. Netflix, I love to see that. We'll see what happens there, but looking like it's trying to pop through these moving averages. It still has got to clear 335. That's like a pretty main spot. So we'll see what happens here on Netflix over the next couple days. Still, I'm gonna give it probably some time, even if it does. I want Netflix to come down, but it's going. Yeah. You and me both, brother. Yeah. SPY. Yeah, it looks like it's trying to push. We might make a run to the daily highs here pretty soon. Actually, we're not getting too far away. It's just been such a quiet day. The market hasn't really been doing a whole lot. And we might be kind of quiet as we go into tomorrow. I'm really kind of hoping to see the Qs start to push higher and leave the rest of the marketplace behind. Looking at that daily, because if we can just push higher here, even on the SPY, if we can just push higher, maybe at 0.5%. Yeah, 0.5% would just about be perfect. And the Qs could actually push up like 1%, and one second, push up like 1% up into that 327 type area. Man, that would almost be glorious to see that. I mean, if it could do that tomorrow, that'd be great. Why AMD Rocket? Why not? Right? Got no, I got no answers, man. AMD. I mean, this is still kind of coming on the heels of that AMD S&P Microsoft deal that was announced Thursday. Because I mean, it's ever since then. Let me go to a 15-minute. I mean, ever since then, it's been like definitely got some new juice in the bloodstream, right? So, I mean that Thursday move was a pretty good game changer. Even though it didn't close above all these moving averages, it obviously got a higher volume uptick. This is after the gap down it had from earnings. Yeah, I just don't like when you get unexpected catalysts like that, especially like right after earnings. Like they just had earnings the day before, or really, I mean, two closes before, and obviously the day before was their trading day after earnings. But like they didn't announce anything at their earnings, and they waited like it came out the next day. So I was just kind of like, you got to just be out. Oh yeah, I mean PE on a lot of things is dumb. Any thoughts on Amazon long term calls? I don't like it. I just don't like it. That's my rationale. I just don't like it right now. Give me a sec. Let me do this. I'm gonna clean this up. I'm gonna bring up the cues from the high that was. I'll just take it from the beginning of last year. I know the high for the cues was actually just a couple weeks before, in earlier December of 2021. But I'm gonna take it from the beginning of 2022, and I'm gonna add in the big ones. I'm gonna add in APL. I don't really know what this is going to display, but I just kind of want to see because Alphabet and Amazon really have not been really holding up all that well. And we can add in NVIDIA as well. Add in AMD. We got in Tesla. There we go. So from the beginning of 2022, this is kind of what I would say probably a lot of more retail focused traders, a lot of heavy weighted stocks on the market. This is kind of what they've done, right? You got NVIDIA, AAPL, Microsoft. These three are outperforming the Qs. This is not even the SPY. This is the Qs. So this is where the concentration of leadership really has been. And let me go look at. There we go. Let's look at past year. This is what's gone on the past year. Now this is not since the beginning of 2022. This is past 12 months. You can just kind of see what's kind of happened, right? Amazon and Alphabet have lagged. Tesla has lagged. So, I mean, does all that check out? Yeah, pretty much it does. Nvidia, where's Nvidia? Nvidia up pretty good. Qs are up 19%. Or, I'm sorry, they're not up 19%. They're down 19%. So, to me, Amazon kind of just lagging behind. Like, you could say, hey, you know what? Every stock kind of has its time period. Maybe Amazon's time period is coming up. What I don't like is if we take a look here from the beginning of the year, right? Since the beginning of the year, we've had a lot of movement in. Yeah, nope. Percent, thank you. We've had a lot of movement in stocks around. A lot of it's what AI generated. A lot of hype in AI is just crazy right now. I don't even say right now, but it definitely was a couple of months ago. But we haven't really seen the market move all that much over the past couple of months. Um, all of these others have been performing pretty well. Amazon and Alphabet are still performing in line with the Qs. Like they're the two lagging of all these stocks I got up here. Nvidia's obviously the one. I think you're smoking crack if you're trying to get in on that run. Tesla obviously had a great strong bounce back to start off the year, but it hasn't really done a whole lot since that mid February peak it kind of put in. AMD, not too bad. Apple, not too bad. Microsoft, not too bad. They're leading the pack, but you got Amazon and Google like pretty much in line with the Qs for this year to date. So it's, to me, if we get into sell mode, these are the two that are probably going to get hit the hardest. Amazon, Alphabet, because they're gonna. I just don't see. I see more disruption to their businesses right now, especially Alphabet. Man, Alphabet definitely, but Amazon is just. I'm just not seeing the conviction, right? I'm just not seeing them be that leader. And maybe if we do go into a sell mode on the market, bearish time on the market, maybe Amazon and Alphabet kind of hold up while maybe these others kind of have the comeback reversion to the mean time period, right? I just don't know about Amazon's upside. That's probably my main thing. They should have been doing it here over the past couple months. That's just kind of where I'm at. So, anyways, I don't really like it right now. I don't. And let me look at Amazon specifically. Let's look at a weekly. So, oh yeah, I remember this longer. Yeah, I do think it's just more of in like this side trading range that it kind of had back in 18, 19, early 2020. I think it's probably just more of in that area, and that's kind of just where it is. It's just kind of in a choppy spot. I would like it actually if it came back and got below and dropped into the mid 60s, kind of like where this peak is right here, or this little dip is. I dig that. I would dig that. I just don't like their business. They're trying to run two completely different businesses, and I just don't like that. It just, to me, they're just not focused on one or the other. So I don't know. This one's just really tough. That's what I don't like about it. I just don't like how it's tough. I like things that are easy. I could make a case to be bullish on Microsoft and Apple. I could, because they both generate a lot of cash flow. That's a big deal. Ooh, Microsoft dropping off there. Oh, well, 10 minutes ago I said, oh, we might be making a run to the high of the days. The market was like, nah. No. look at that, man. That was literally like 6 minutes. 1, 2, 3, 4, 5. Yeah, 6 minutes from that little peak candle to this last red one was 7 minutes, I guess. This little lower wick, man. All right, that's crazy. So that's the low of the day. I mean, that just snagged low of the day. Wow. But I'm going to be looking for tomorrow. If I'm really kind of hoping we can continue to push higher a little bit on the Qs. And if we can, I'll be probably getting into some puts before CPI on Wednesday. Mostly because, let's look at it. I think people are going to start to price in more rates for a longer period of time. And if they continue to do that, that's just going to put pressure on equities. So saw a report this weekend that the Warren Buffett actually liquidated a lot of U.S. equities. Went to Treasury specifically. So interesting. So we haven't really seen much change here from Friday to today. A little bit of an uptick on a possible rate increase in June. Looks like higher for longer into July a little bit. A little bit more higher for longer into September. A little bit more higher for longer as we go into November and December. So yeah, we're still seeing like the higher for longer kind of day over day change has been ticking up between Friday and today. So I, if CPI comes in on Friday and it's, I'm sorry, wrong way. Yeah, if CPI comes in not on Friday but on Wednesday and it's above this 5% and it's not tracking down, I don't know what to kind of think about that because it's almost kind of like a lot of market volatility has kind of been settling out here over the past couple of months. It hasn't been crazy. It seems like people are kind of getting adjusted to higher rates. And I'm talking about like in the economy, right? In the economy, in the consumer side. And I can see people kind of getting out there like, okay, rates maybe not coming down as quick, and people are kind of getting out there and putting the money to work. Even though it's a higher loan, right? Higher rate on the loan, going to cost more, that kind of stuff. But I think people are like add-ins with it. They're not really going to wait for the zero interest rate environment to come back. They're taking the opportunity to probably just put money to work, get in. Whether that's buying a house, buying a car, whatever. Dollar man is just hanging on to that 101 level. Jeez, VIX trading a little bit lower today. We don't need to look at the reserve balance sheet. 10-year yield. Ooh, that's driving higher. 10 2-year inversion. It definitely had come back. It's now kind of retesting this neckline from this inverted head and shoulders action. Right, so head, neckline, shoulder. Here's the breakout. Here should be the retest into that neckline. So it might continue to happen tomorrow. Probably not a whole lot movement going on until we get to Wednesday. I'd imagine Wednesday we probably do start to get more movement on the stock market, on a lot of markets actually. So I wouldn't expect this to move too much, but we might see it start to move Wednesday. GLD, dollars up, gold's up. That's interesting. But dollar is at a spot where it's not moving a whole lot, so gold also not really doing a whole lot. Seeing some fall off here on the bond side though. HYG falling off a little bit. Obviously, just retesting the moving averages. Had a double retest in the moving averages last week. Obviously, from 2 Fridays ago, obviously last Monday dropped off pretty good. Retested the moving averages, dropped off then Thursday. Here's another retest that we had into those moving averages. Yeah, we'll see if this continues to break down. It kind of seems like it wants to. I mean, HYG, the high yield bonds are definitely not performing all that well. LQD is back down to last Monday's low. So I mean, the bonds are just not strong. Like it, bond side just telling you like, hey, we got some issues. Still, we have issues, and I'm just kind of curious. Just kind of what these some of them. So LQD is about 4.5% from its high in February. 8.5% from its high in. But let me do it a different way because it's going to be so hard to analyze that. What I want to know is about what range, because the bonds and stocks basically bottomed about the same time. It topped out about the same time. But I want to kind of see, about where these guys are at. I guess equities bottomed a little bit higher, or a little bit earlier. So yeah, you got the SP 500 is definitely up here in the red zone, and you got the LQD. It's kind of like here in the yellowish zone, orangish zone, kind of rolling over a little bit more. So Equities bottomed first on October 13th. Did they top out first? February 2nd, LQD, February 2nd. So they topped out on the same day, and they bottomed about a week later, a week after the SP 500. So, yeah, just a disconnect between these two markets. Oof. All right. Let me know if there's anything you guys are looking at. I just don't dig bullishness on many things. I just don't. It's not that I'm wanting to be bearish, but it's like the things that you would want to be bullish on. I mean, they're just so stinking high, and then you want to take an opportunity to be bearish on things that haven't performed. You're like, oh, all right, I can maybe get these guys at maybe you think at a discount, but really, like fundamentals and valuations say that there's not a lot of opportunities on things that even haven't performed. So I don't know. It's a tough market, and I honestly, for the past several months, we haven't done a whole lot. We've chopped around quite a bit. I get that, but we haven't really gone too much of anywhere. And it's one I don't mind being patient. I don't mind missing the breakout because I can just pick up the retest, and then if that does happen, I would miss maybe 1 to 2%, right? Because I don't mind if we take a breakout from here, we go up 3.5%. Obviously, that'd be a pretty good breakout. And then if we pulled back, then I'd be willing to take a bull shot. But I'm not. I'm gonna make the market prove that to me. Make it prove it. So that little snap down was definitely bought up relatively quickly. That was kind of easy to spot. Whenever you get some weird snaps like that, especially into the bearish direction, typically I just like default to bullish mode. Let me do sector rotation real quick. There we go. So without the gap, there we go. This is with the gap. So day over day with the gap. XLC doing pretty good. So Alphabet, Meta should be doing Alphabet. So Alphabet and Meta's up about 0.5%, but Alphabet's helping that out. Alphabet's up pretty good. Financials are doing pretty good. Energies are doing pretty good. But both of these two sectors got absolutely wrecked last week. So, yeah. Discretionary's kind of in line with the market. Materials, tech, staples, healthcare, industrials, utilities, real estate. It's all underperforming. Real estate definitely underperforming. As far as without the gap, intraday pricing action, definitely XLC. Staples, healthcare, and utilities are the next three. So all the risk on, you've seen a lot more better performance out of them throughout the day. And it's kind of unfair because, really at the top of the hour, we saw that quick little drop. Maybe a lot of that came out of tech side, because it kind of does look like it. Like tech dropped off pretty good. XLY dropped off pretty good. But you didn't really see that kind of come out of staples, healthcare, and utilities. But they were doing pretty good before that, even. Financials, lagging, industrials, materials, energies. So financials and energies, they're definitely lagging on the day. They just had good gap ups coming out of the weekend. And probably, I would imagine a lot of it was some of those regional banks, for the financials at least, didn't go bust over the weekend. The other thing that probably led a lot to the KRE and financials absolutely ripping it on Friday was report. Oh yeah, look. Yeah, so the KRE gapped up and sold off. What about the KBE? KBE as well. XLF. Oh, I hit the wrong button. XL. I hit the wrong combination of buttons that time. Um, XLF kind of flat, but yeah, the KRE. So Friday didn't really do a whole lot intraday. I mean, it was kind of volatile a little bit early on, but it kind of got flat. Anyways, it was rumored, or not rumored, but expected that short selling was gonna, like, the regulators gonna ban short selling. I don't know how long that was gonna happen, but apparently there was just a lot of questions around exploitation of short selling, especially against some of these regional banks. So that was one of the things that led to a pretty strong pop there on Friday. But you can still see, like, we haven't really had a whole lot of movement. Sorry, really since that open on Friday. We opened here, and we're pretty much at the same level. So yeah, I mean, I can see us retest higher, but regional banks. Who freak knows, man? I'm not bullish on regional banks. I'm not bullish on a lot of the banks right now until they get a lot of their long term bonds and loan issues kind of taken care of. PayPal earnings today after the bell. I like this. I mean, I like this channel it's been in. Very nice. I'll tell you what. Give me the box. Let me get the rectangle here. I mean, very nice little choppy box it's been in for, what was that, about a month and a half. About a month and a half. Um, hmm. Huh. I'm not. I'd be kind of inclined if we get a little bit of a gap up to like 78 to play it bullish. I'd be inclined to do that. Or if you get a little bit of a gap down like 71 or so, I'd play it bearish. If it's just in the zone, obviously you can't do anything with that. It's been there for a month and a half. Not much to do. Not much to do. Um, what is TSLA? Oh man. Okay, I'm still looking for this move up in about the 180 area. I'd like to possibly be bearish off of that. Maybe 180 to 185. Possibly be bearish on that sucker if that happens. AAPL, they make a lot of money. Still getting that follow through. What about MasterCard? How's MasterCard doing? MasterCard up 1/4%. Not looking too bad. Nice little upper wick so far. Had an early day pop, and that's kind of just slowly giving it back throughout the day. What about Visa? Visa, similar kind of thing. Similar kind of thing. All right. So earnings. I like that evening star right there. Very nice evening star. But this gap up it had on Friday, that is like another level. Wow, 2.75% higher that day. Wow. Oh, Boeing. Man, it just looks like just a long, really, really long flag pattern. It broke out. You got this double bottom. So anything pulling back to about the 170 level, which maybe it does here over the next couple of months, probably just gonna get bought up. I mean, because you had a slow rollover, double bottom, broke higher. We just haven't quite retested into that 175, 170 level. Once we do that, it's I would imagine it gets bought up. Probably gets another rip like this again. Okay. LUV. Yeah, these airlines just had bad earnings, man. DAL. United. United's trying to at least push higher. Got a nice little upper wick coming in today, though. Let's see. What about... let's see. How is it? I didn't look at NVIDIA. Dude. NVIDIA, man. NVIDIA is going to have earnings at the end of the month. Yeah, we'll see if they make it through that. AMD, though. Jeez, it's a beast. Intel. Intel's consolidating after a breakout, pullback, retest. Probably is going to just continue to push higher eventually. Micron consolidating, long-term consolidation. Average Joe not looking too bad. Qualcomm. Yeah, Qualcomm's in a tough spot. I mean, if you like long-term stuff, it's not a bad area. I could also see it just easily come down and snag this 96 level, 96, 97 area. Yeah, I could easily see that happen. All right. Those transports. So transport's pretty much flat as well. CSX. They're up a little bit, not too much. UNP down a little bit. NSC down a little bit. Oh man, UPS down about 0.85%. Jeez. FedEx is doing pretty good. FedEx is looking pretty good. Old Dominion Freight Line. Not looking too good there. Not looking too good. They kind of look like UPS. They're about ready to just roll over. And then, oh man, what's the other? JB Hunt. Yeah, there we go. JB Hunt. Oh man. So JB Hunt not doing as bad as that transport earnings week like 2 weeks back. It was just brutal every day. Just got obliterated. So yeah, they had a nice bounce back week last week. Okay. So SPY has come all the way back and made it back to positive after that little quick whiplash. How fast was it? How much did we sell down? About 0.4%. 0.4%, like 6-7 minutes. That was quick. Anything going on the news side? Stocks drift, regional banks, par gains. Party blows. I guess that's pair gains. I don't know why they. Zscaler, Tyson Foods, Monday. Oh. ZS. Ooh. What happened here? Up over 2%. Best performer in the NASDAQ 100 so far today. Well, on improved fiscal 2023 outlook. Okay. PacWest leads regional bank rally. Berkshire Hathaway did AMC. Okay. So nice. Bank for long term. Why are they selling off? Oh, dude, don't worry about day to day stuff. Don't sweat the day to day stuff. You like the long term. I mean, I could see why you would like the long term for Bank of America. I get it. Yeah, don't worry about the day to day stuff. If you have a long term horizon, don't sweat the day to day. I mean, I like it. I like it. It's a good spot. It's a good spot to be picking up like major banks with this sell off that they've like the financial companies have been having. Like great. Just keep doing it. $3 trillion of assets. That's a major bank. They have a lot of flexibility. They have good like they'll make it through. Yeah, I like it. Wells Fargo. Wells Fargo's up though 2%. Jeez. JP Morgan. JP Morgan not looking as bad. Goldman. Goldman's kind of flat. Morgan Stanley down a little bit. BlackRock, Blackstone. Okay. Pac West. All right. So some of these regional banks, man, I would actually I wouldn't say short them. I would like this was not a bad spot to on this gap up to maybe playing bearish. Only do it through options. I would do it through like longer term type options. I would actually like it if it came back up into like the 850 to 9. I could dig that. You also might not even be able to short um, some of these regional banks. They might just not even be able to happen. You might have to just be bearish on them through options. Let's see. Oh yeah, Texas Instruments, TXN. Oh man, I didn't realize how bearish they'd been over the past 2 weeks. Okay. PayPal. What is this? Is that Goldman? No, that's Schwab. Schwabi. How many assets you got? About a little bit over half a trillion. A little bit over half a trillion for Schwab in assets. I dig it. I dig it. It's kind of funny, man. There's a lot of people that are like really bearish on Schwab, or they're like, this is a great time to be picking up Schwab. There's not too many people that are in the middle. Oh man, come on. Push and go break the daily highs, Q's. I want y'all to run. There's just not a lot of movement going on today. There just isn't. Is it good to close called debit spreads if they are in the money or let them expire? Called debit spreads. So you sold a bearish call vertical. What? Let me run through the scenario. What stock are you talking about? Let me just and because when you mention in the money, like that means are you mentioning in the money as in you've made money, like you're profitable on the trade, or because in the money would mean the stock's actually above your strike price. That's really what in the money means. So Your statement's a little bit confusing to me. That's all. I'm just a little confused by your statement. There's no wrong. There's nothing wrong with taking a profit. Nothing. If you're like, hey, you know what? $10 is $10. I'll take it. Go buy lunch today. There's nothing wrong with that. So, okay, that's funny. So Microsoft have been lagging all day. You get that drop on the market, and then they've come back and just roared higher. That's funny. How's it? Alphabet. Alphabet just running today. Nice. Well, it was kind of interesting here on Alphabet. I bought coin last week. I bought spread to be bullish. Coin blasted upside. I was in profit. I closed it for near. I closed it very near the expiration. Either way, I should be in profits. So that wasn't a debit spread. That was a credit. I'm sorry, that was a debit. My bad. I'm sorry. Yeah, you're right. So you said you bought a vertical option, a bull call vertical, basically, and you paid however much money. Yeah, you could. Depending on where it's at, like if it's kind of down here, like it's well above, and your expiration's kind of close, then you could definitely just wait. But if you're like, hey, if you're at like 95% of your max value for your option spread, so if your option spread is $1.50 and it's trading at like $1.35 or $1.40, and you're like, you know what? I don't know what's going to happen here between now and my expiration. I'm going to lock up 90% of my max value. Dude, there's nothing wrong with that. So 53, 54, said 53, 54. There's nothing wrong with that. Because when's your expiration? If it's this Friday, I would say you probably made the right choice. I mean, we could very easily just roll back and come try to refill this gap that we did on earnings this past week. Yeah. Oh, this past Friday? Oh, yeah. You're all right. You did close it? Okay. I mean, yeah, it was fine. I probably would have left this alone. I probably would have left it alone, mostly because it did gap up. It gapped up above the 10 moving average that was coming down. So you're going to have a little bit of a push up from there, but dude, there's nothing wrong with that. Oh, a few minutes before expiration? Oh, yeah. Oh, yeah. You were basically at max value then. Yeah. You were essentially at max value. It wasn't a big deal. You could have, so if you want to understand the process, you could have left that in your broker. Your broker would have exercised both sides for you, and you would have got max value. There you go. It wouldn't have been a big deal. It literally, your broker would have been like, okay, we're just going to liquidate both sides of the 53, 54 call. They would buy you the shares at 53. They would sell you shares at 54. You'd make the full dollar. Minus out if they charge commission to do options over the, to do that. Exercising of the options. Some brokers do, some brokers don't. Yeah, you didn't do anything wrong. No, yeah, you're good. Some brokers actually, if you don't have enough capital in there, they might say, hey, the stock's a little bit too close to your spread. If you don't have enough capital, they will liquidate out your position. And if they do it during a time period where the market becomes very illiquid, you could get a really bad fill on their behalf. So if I'm really, really far in the money, I don't mind holding it over the weekend. Right, because then my broker will just exercise both sides. But if it's close, like if maybe coin was trading at 54.50 or 54.40 or somewhere in there. Like that would have been a little bit too close. Their risk management department might have been like, yeah, he doesn't have enough capital in his account to cover if the stock winds up just having a quick flash down below 54. Like then, maybe the stock then closes at like 53.90, but then the options market for that, the options you're in go super illiquid and they fill you at like 10 cents instead of like 95 cents. Yeah, that's happened. That has happened to me. So trust me, I've gotten filled on a vertical option that was in the money, and it was pretty well in the money. I got filled for 0 cents. Oh, I was super enthused about losing a couple $1,000 in literally a couple seconds. So yeah, you can. It was that lesson alone that kind of just like, you know what? I don't mind just closing it out. I don't need 100% of the return. I will gladly take 95% of the return, just closing it out. Not a big deal. Thank you. And I'm not even talking about like return. I'm talking about of max value, like 100% of max value, but closing out for like 95% of max value. Yeah, it's yeah. You gotta like market liquidity sometimes because in those market liquidity type events like that, it's everybody's getting orders in those last couple of minutes. So sometimes the market just goes super liquid on certain things. Options are typically an area that could happen. That could happen. But yeah, you didn't do anything wrong. You did. Honestly, I think you did it right. I think you did it right. You played the safe card. Played it good. IWM DIA. IWM's been a little lackluster. Equal weight SP500 has been a little lackluster. I hope this lacklusterness really continues into tomorrow on the RSP and the IWM and the SPY, and the Qs actually, they're up 0.25% right now. So if the Qs can actually go up, like another 0.5% tomorrow, 0.75% tomorrow, my gosh, I would love that opportunity to then be bearish, especially if like the SPY pushes up maybe 0.5%, maybe 0.5%. So like if the Qs went up 1% and the SPY went up like 0.5%, I would love that. I would love it a lot. Guys, there ain't much going on. So let me know if there's anything you want to look at. Other than that, I'm probably just gonna wrap it up. I'll run back through some of the things just to make sure things are tracking. But there's just not a lot going on today. Netflix actually one of the few spots in the market that's actually pushing higher today. First Solar, yeah, First Solar ain't gonna die by my options expiration, so it's whatever. But yeah, Q's up into that 327 area. Oof. I would love to see that tomorrow before CPI on Wednesday. And then if the Q or if the SPY could actually push up to like 414 to 415 tomorrow, that would be awesome as well. Kind of just like get in right there around 415.40 maybe, and just fill this gap down from last Monday to Tuesday. I would like to see that. If we can do that by midday tomorrow, that'd be great. But I'll probably be doing some bearish positions if that happens before I get a live stream tomorrow. I'm gonna try to wait for the live stream just because lower implied volatility time period of the day is about right now. So, do I like Tilray? I do like fertilizer. I do like fertilizer. And that's essentially what you're asking. I do. To me, it's something about weed legalization. Yeah, okay, yeah, they are more on that cannabis side. Yeah, I forgot about that. So here's where I'm kind of at with the cannabis and marijuana stocks, and this has kind of been my take for a couple years, like actually 5 6 years. They are, oh man, what was the one? I'm trying to think of some of the others. Do you know any others? Before I have to go search and look them up. There was a few others that are out there. People want Canopy Growth. There we go. CGC. How are they doing? I mean, just Canopy Growth, man. I remember all this back over here, and people were just like, "Oh my god, marijuana stocks." And that's the other side of the mountain. Literally looks like a mountain range. Like, go up the mountain, you get the bowl, you go down the mountain. My thing on Tilray and a lot of these weed or canopy stocks is the industry they operate in. Even if marijuana is legalized, they still operate in a freaking highly regulated business. Even if it's legal, they are just so regulated, and that's the problem. Like, that was the problem that I was kind of spotting back in 2018, 2017. I mean, because I knew some people when I was living up in Colorado. Like, it's tough to make money just because all the regulations, man. It is crazy, the regulations they have. So I'm not really big on them like long term, unless, I mean, you could take a shot. You could take you could take a shot. You know, maybe build like a longer term kind of position, have like a longer term outlook. Like, hey, if some of these states, especially probably some of the larger ones, start to reduce some of their regulations and make it easier, and especially then if U.S. Decriminalizes it at least and allows it to be transported across state lines, I think that would be a big deal for the industry. But if you don't really have those two factors, like easier regulations and the U.S. Easier transportation across state lines, then there's not much hope for the bullish side. There really isn't. It's very difficult. And just because they legalize it doesn't mean it basically means it's like a non-criminal type of offense. It doesn't mean that the business is effective at being a business. They still are hugely regulated. Right? So like I think in Texas here recently they just they legal hold on, what did they do? No, they decriminalized it is what it was. They decriminalized it. They didn't legalize it. They decriminalized it. Okay? But they didn't touch anything about the regulations of the business, because there actually is marijuana and cannabis growth in Texas. It's just highly regulated. So it's just really dumb. Anyways, that's just my take on cannabis companies. Just too much regulation. Too much regulation. VIX, still just coming down. Dollars still just getting compressed, hanging out. 10-year yield rising. The inversion yield kind of just hanging out, not doing a whole lot. So 10 and 2 is basically do the same thing today. The GLD not doing a whole lot. Dollar's not doing a lot. Makes sense. The bonds are actually where we were seeing some earlier movement throughout the day, especially early on in the day. LQD, though, LQD breaks this support that's basically on, if you want to call it the 200 moving average, you can do that. But basically right here around this 107.70 level is 65 level, because we bounced there before. Obviously, we bounced there last week. It's right where the 200 is sitting at. So you kind of have a funky type, like head, shoulder neckline. I'm sorry, neckline, shoulder, and then like here should be the breakdown. So you kind of have like a little double head, and then you got the neckline, and you got shoulders off to the side. So it's kind of a funky pattern. Um, and you can really even say like maybe that was the neckline as well, and you had like an uptrend through here. That was the neckline. We retested into the uptrend, and then now we're rolling over. So it's kind of got a funky, but it no way does that look bullish, man. It just doesn't look bullish, and really a lot of it had to stem from last Monday because the way the Friday close at the end of April looks super good, and then we come out on Monday and it just got smashed. And obviously, then coming out of this weekend, it's back down to those same levels where it was last Monday, not looking the best. That's what's kind of where I'm at on the bonds, not looking good. And you're getting equity guys that are like, yeah, man, everything's fine. Bond guys are like, I don't know about that. So, guys, it's a quiet day. Let's go eat lunch. Y'all have a great rest of your day. We'll talk tomorrow. I still don't expect a whole lot tomorrow, but if we do pop bullish on the market tomorrow, I'll probably be looking to be bearish. I'll be looking to be bearish as we go into CPI. And a big part of why that is if CPI drops too hard, that means demand has dropped off quite a bit. If CPI comes in hot, in which the forecast is calling for 5%, if we come in higher than 5%, essentially what that is well, that means the rates are going to be higher for longer, and that would confirm it. And you might see a massive reprice on equities going forward because bonds and the future expectations of what the Fed's going to do on interest rates is going to dramatically probably just shift higher. And maybe it doesn't for June, but like any of these months where there's possibly cuts, they are going to get elevated. They're going to be like, nope, there's no cuts going out for even longer. And so that's just going to put a lot of pressure on stocks. So anyways, those are kind of like what I'm kind of looking at. And you know what? If we come in at 5%, I mean, I think the Fed's kind of on it with their call of, we're not seeing inflation come back down. So that's just kind of where I'm at with it about CPI. But we can talk more about that tomorrow. Alpha Hunters, have a great rest of your day. Talk to y'all tomorrow. Take care, guys.